We're dealing with a wild card. We're dealing with all sorts of uncertainty. We're now dealing with the fog of war. It's just to say that the shorter term trend with Trump and the politics and the geopolitics has been one where things can shift pretty quickly. This is the Realize Your Wealth podcast by Aretec Wealth. We want you to be wealthy. We want you to feel wealthy. We want you to realize your wealth. All right, here we go. It's Friday. We're back. We're here twice this week because we did our special midweek update. And we've got Roman Cannell from our team. Greg's off. He's off at some meetings. He's working. He was with us earlier in the week, so we want to bring Roman on sort of as our special geopolitical consultant here, because I think the last time we did a video with Roman, we were talking about the whole Greenland and Trump situation. But anyways, Roman, how you doing? What's going on? What's happening today?
I'm doing awesome. It's Friday morning, and yeah, Greg's away working, meeting clients. So happy to step in and fill that role. And you're right. It seems like every time I come on here, there's been a major global or geopolitical event in the interim. But looking forward to our conversation today and getting into things with you, Will.
Yeah, special correspondent Roman Cannell here. So it's good to have you. Good to have you on here. But I think what we wanted to do today, we just wanted to unpack more on this whole conflict, the geopolitical, the war really that's going on out there, because obviously that's front and center for the last week in markets. When we were talking last Friday, markets were strong. Things were humming along in the right direction. Things were looking pretty good. Things can change on a dime. We've seen so far markets off maybe 3-4%, something in that magnitude off the highs just in the last few days. So definitely some increased volatility, definitely a little bit of a downward movement on the back of this whole Iran situation. But looking forward to diving into things here, Roman.
Yeah, no, for sure. And I mean, of course, I'm sure everyone knows now with news spreading so quickly nowadays, geopolitical tensions have escalated in the Middle East. And just I guess for investors, for our viewers, I want to maybe give a breakdown of what's going on out there.
Yeah, I mean, this obviously started over the weekend. So you just saw the news coming in like crazy, and it pretty much hasn't stopped on this thing. And I think when you look kind of market patterns so far, initially markets kind of brushed it off, no big deal on the Monday. Then we started to see some increased downside and volatility, but we've had a few days where the risks are kind of pouring in overnight, and then the market seems to kind of be shrugging it off. So although we've definitely had some downside out of markets, it hasn't been dramatic yet. Like we're talking about a few percentage points. It looks as if it's a short-term pullback. You've seen specifically the area of markets that are really responding to this is oil and energy markets, where we're not certainly not heavily invested in there. We've got a little bit of indirect exposure, but one of these very volatile areas of the market, and I think oil prices are up 50-odd% this year now and 30-40% in the last week for obvious reasons, where the whole supply has been disrupted based on the war and the conflict that's going on. Definitely an unsettling time for the world and everybody and investors, and it's rippling through into areas of the market. And we have seen some pockets of the market that have held up a little bit better, whether it's some of the defensive areas or commodities like energy or some of the other commodities we have seem to, for the most part, not entirely over the last week, but seem to, for the most part, been holding up. But it's certainly been a risk-off environment the last few days out of equity markets.
Yeah, for sure. And lots going on out there, and things are moving quickly. I mean, when we look back at history, markets have navigated through numerous global conflicts.
Yep.
From your perspective, what does the historical evidence suggest about how markets will typically react to something like this in the short term versus the long term?
Yeah, and well, we have, fortunately or unfortunately, we've got recent memory of this, right? We had a similar event in 2022 with Russia and Ukraine, and there's been lots of market data to look at. And I think History does repeat itself, but also no two events are ever the same. And I think what you see with these wars and geopolitical conflicts is markets do usually react emotionally in the short term, and there's sell-offs, there's downside pressure, things are being pushed down and pushed back for sure. But you look at this more often than not. I think the data saw was uh, 60, 70% of the time you go out weeks, maybe a month, and markets are higher. You stretch that out longer, you go out a few months, 3, 6 months, markets are definitely higher, and then a year markets are significantly higher. And we've seen that. We've seen it before, and I think that's what something to remember with this is that as unfortunate and as unsettling as these sort of situations are, it's not really fundamentally changing what's going on in the underpinning of the economy, at least not yet. Companies are still doing still doing business. Businesses are growing. The economy, from a broad standpoint, is still humming along. Obviously, some implications: higher oil prices, things like inflation, higher bond yields have an impact on the markets, and we're starting to see some of that risk priced in. So that does impact equity markets. But at this point, when we're a few days in, not even a week yet into a big geopolitical conflict, war in the Middle East, it's not disrupting the whole global economy. It's not disrupting the North American, the U.S., Canadian economy at this point. And like anything, there's winners and losers in this. I tend to think, which we can unpack a little bit more, I tend to think going into this, we're pretty well positioned because these have been themes that we've seen playing out for quite some time, really over the last year and a half, that we've seen this increased geopolitical uncertainty, increased tensions, increased conflicts. So some of the areas like gold and aerospace, defense, military, commodities in general, just more defensive types of stocks, even cybersecurity, well positioned for this type of in environment. But we'll see. We're continuing to see. I'm calling it kind of the fog of war here because when you've got this going on, it's uh, pretty uncertain. A lot of unknowns when it comes to the markets and investing. And the last few days, that's kind of the environment that we're operating in here.
Yeah, it makes sense. And there's, tons of variables out there, a lot of moving pieces. And it's all the more important, to have a real advisor that's kind of leading the portfolio and really just driving returns for clients, whether, markets are protecting on the downside or, whether we're trying to capture upside with opportunity that's out there. And I mean, just on that note, I mean, it seems like he's been a topic of conversation constantly since coming into power, for better or worse. I would say, what's kind of Trump's effect on all of this, and how's that playing out?
Yeah, asking me the easy questions, Roman. I like that. Look, I think one of the things when it comes to Trump is he's showing a tendency to change and shift his position. So you never know, right? Trump's his wild card, to say the least. There's some things he's done market wise that have not been very good. Some things have been more positive and constructive, at least for investment in equity markets. I think this is one, when you look at least the short term market reaction, certainly not great. The tariffs are another example. I think the aggressive downside from the tariffs lasted maybe 2 weeks, maybe not even. It might have been 10 days, something like that. It was a week or two before the whole rhetoric and the messaging changed. So we've seen that tendency that Trump comes out with a very aggressive stance, a very aggressive messaging, which I think everybody's seen. And if markets, investors, Wall Street doesn't like what's going on, we've seen a reversal in that, or a change of messaging, or a change in strategy. So again, I'm not saying that's happening here, because right now it's Friday morning around 11. I think the messaging on this war, this conflict, is as aggressive as as we've seen. Markets probably are not going to like that, and If that stance softens in some way, you hear of negotiations. I'm not saying they're going to change their whole military strategic operation, but it might just be what you start hearing coming from the tweets and the true socials. So I do think that Trump uses the stock market as a barometer of his success, his popularity. He probably listens to the market. Might be the only thing he listens to. We'll see if he continues to do that. We saw that with the Greenland situation, though, too. I mean, what we were talking about a month ago or whatever that was, is he had a very aggressive stance on that. Was talking about it at Davos at the World Economic Forum, and he specifically referenced markets not liking it, markets confused, and then all of a sudden his stance changes. We have the framework for a deal. I could see. I mean, it wouldn't surprise me in the least if something similar came out of this, but you never know, right? We're dealing with a wild card. We're dealing with all sorts of uncertainty. We're now dealing with the fog of war. It's just to say that the shorter term trend with Trump and the politics and the geopolitics has been one where things can shift pretty quickly.
Yeah, and you touch on our portfolio, our positioning, some of the sector specific moves we've made over the past year for clients going into gold, cybersecurity, aerospace, and defense. I guess moving forward, what are you looking for, or what risks are out there potentially, that might shift, change the sentiment, or how we might move the portfolio for clients?
Yeah, I mean, look, I think we're in a right now, at least, we're in a shorter term pullback, which is not uncommon out of markets. I do think with this war, with this conflict, if things were to escalate and continue to expand out, markets are probably not going to like that. I think we've seen that already. Markets haven't liked the initial start of this. I think when markets heard the news, they thought maybe this is a Venezuela type situation where it's going to be over in 24 hours, sort of thing. That already hasn't been the case. It seems like the conflict's expanding out. So I think the risk is, if this starts to expand and grow, that's not good. It's more disruption, more of this fog of war. Markets really do not like uncertainty. When you have a war that's now being waged, markets don't like that. That being said, from a historical side, all through history, when these things happen, market bottoms and downsides get put in well before a war is finished and over. And it's not like everything has to be solved and resolved. That happened even going back as far as World War II, that I think it was 3 years before the end of the war that markets bottomed out. So the risk is really this thing expands. And I think right now it's oil, the inflation, the interest rate impact, what that's going to do to the economy. One of the things, at least North America wise, and when you look at, say, the US and Canada, the US especially, if this was 20 years ago, the US would be in a much worse spot from the lack of oil. They're energy independent now, so it really doesn't impact them the same way it would have. Canada's got ample natural reserves, not that their natural resources, and not that increased oil prices are going to impact the economy. It's just not. North America is not going to be choked off in terms of oil and gas by this, but there still will be ripple effects. So I think that's really the risk, is one of inflation. It's one of higher interest rates, and it kind of ties in with the whole tariff situation too. Is that tariffs generally were seen as inflationary. Who even knows what the real tariff situation is now and what's going on out there? That's still one that's up in the air and there's uncertainty on. So if we start to see inflation coming in, the potential for higher interest rates, that certainly has an impact on markets, impact on the economy, and investors start to change course. And that's what we saw, frankly, in 2022. If we use that playbook, is we had a war, higher oil prices, the really high inflation, high interest rates, and it wound up as being a pretty bad year in the market. So I think that's a sort of risk and downside if you want to use 2022 as a potential playbook for what's going on out here.
Yeah, and completely understand that. And a lot of times, oftentimes, clients, individuals will focus on the risks when there's heightened uncertainty, protecting on the downside. As advisors, as portfolio managers, part of our job as well, other than the protection on the downside, is to also focus on what opportunities can arise from volatility. So I guess just a question to you, what are you seeing out there as an opportunity moving forward, where there are gains to be had, or where there is positivity?
Well, there's a lot of names even here in the last week or last few weeks that have really pulled back in markets, and I think that's what we more have our eye to, is that the sort of disjointed nature of what's going on is that things can get oversold, things can get washed out. Really high quality, strong, like technically fundamentally strong names can present a buying opportunity and entry point. I also look. I mean, I've said last year, to me, when you saw what happened in March and April, that felt like it would kind of, there was sort of COVID. It felt kind of like COVID type of vibes. It wasn't sort of, it's never the same thing, but there was that feeling last year that you had this external shock from the tariffs to markets. The world order was being disrupted. Nobody knew what was going to happen, and you had this bounce back. And I think if we use that playbook again, you could probably put that over the top and say, all right, tariffs, inflationary, COVID, supply chains, all of that was inflationary. Now we've got war coming out. So it could wind up being something similar. But the opportunity there is, if you look at the lows of 2022, which played out, it didn't really play out until the fall, but there was incredible gains that happened off the back of that, not only tech, but across really the whole market spectrum. And look at what we've seen out of markets 22, 23, or sorry, from the bottom in 22, 23, 24, 25, three very, very strong up years. So I think what we're starting to look at is, where's the opportunity in this? Where's the upside? Where are the names? Where are the sectors? Where are the pockets, the markets we can go to look to capitalize, when and where it makes sense, because anytime these things happen, there's certainly opportunity, there's upside potential. It's probably still a little bit early, but that's what I would encourage clients to start thinking about, not necessarily as this huge, at least investment risk to be unsure of. It may be lingering. This might be going on for a while. I'm not saying it's going to be, it's today, it's tomorrow, but over the next coming weeks, months, there certainly could be some very good opportunities here, and we want to be ready for anything here to take advantage of what's out there from an investment standpoint.
Yeah, makes sense with all the risks, all the opportunities out there. We're here working for clients, navigating things, finger on the pulse of the market, like the tree that blows in the wind. Like we always say, we're here ready to navigate things. So I think it's been great speaking with you on the topics at hand, and I think it's important that we continue to speak and have these conversations with clients. To keep them in the loop, stay educated on what's going on out there, and how we're navigating things overall.
For sure. So as always, we want you to be wealthy. I know this week is one where we got some downside out of markets, so maybe not everyone's quite as wealthy as they were a week ago. But we want you to be wealthy. We want you to feel wealthy, which means feeling good, feeling confident about your portfolio, your money, what's going on out there. We want you to realize your wealth. That's what we're all about. That's what Aretec Wealth is all about. So we'll be back with everybody next week, back again soon, and enjoy the weekend, everybody.